Hey, what's going on, traders? This is Spark from Spark and Trade, and I wanted to kind of give a quick sort of just shout out to SMB Capital for putting me on to how to properly use the tick chart, and I use the word properly very loosely. I do believe that you can develop whatever edge that you might see using the tick chart, and it might be very profitable. But just recently, I ran into a video that came out with these guys talking about how to use the tick chart to take advantage of zero DTE option contracts. And the market, from what I've seen over the last, and this isn't a lot of days to gather data, but from what I've seen after watching the video and kind of understanding how they execute using the tick chart, along with three other indicators, and I'll talk about that. It has shown some tremendous opportunities. So, I just wanted to share that with you guys to see how. I mean, like, I don't know, you get some conversation rolling, see if you guys can get some feedback, et cetera, et cetera. But let's dive into it. So, straight off the gate, what we want to do is look at. Let's just look at the market condition real quick. This morning we came into the market. We knew that we had a possible bounce coming in somewhere around here. I'm going to highlight it because I took advantage of that bounce there on a 1 hour. We had a 1 hour demand. Macro view was a four right here. So we had like a 4 hour area of demand. So I definitely wanted longs at this level because it was there was some confluence with the 4 hour, right? And the market had already tanked this much. And remind me to show you a bonus at the end. So anyways, here goes the 1 hour. We'll go down to the 30-minute. The 30-minute had demand right here. So I basically called longs and actually took those longs and literally got out at the top, and you'll see why. And this has nothing to do with the tick chart, by the way, but I'm just kind of going through the market to kind of give you an idea of what this market looked like straight out the open. So like you can definitely make money riding the market up or down, obviously, but this shows a clear trend to the downside since like 3 a.m. this morning. It was just like bleeding, boom, 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 making some staircases down. And this is the 15-minute, which is my go-to time frame for a play. So if the market hits this 15-minute red zone, I'm out of longs and engaging in shorts if I see reasons for that. Now, at this same circle, which we took to the upside because the 15-minute, 30-minute, 1 hour, and the 4 hour had a demand level, I would risk going and breaking lows. If the market wants to V-shape, W bottom, higher low, I'm gonna make money, right? So that was the play there. Now on the 5-minute, if we go to that circle, we broke and did a stop hunt move. Once the market kind of bounces away from that demand, has a double bottom that fails, they stop hunt people, and then you get a nice run back to the upside. If you look left, that is where the pivot was. If you look at this supply line, we knew that, okay, the market could turn, and then 930 was coming. So I had taken 90% of my position out there, and my runner got clapped by this down move, which triggered me to go into shorts thinking that this supply is going to work. Now, this is a stop loss line. You can consider it like a super trend stop loss, right? So that's indicator number one that you're going to need on a chart. Now they have a different parameter or number that they set, but I find that 5 ATRs away from where price, 5 ATR away from the average ATR, it will survive a lot of the manipulation that goes on in the market. So that's where I set mine. And they have it set to 3, so they'll get out a lot faster than I would on a move that goes against them, right? So just remember that this is just a trailing stop used to keep you in play for as long as possible, and it still is basically telling you to stay short. Let's just clean up the chart a little bit. So I'm going to remove this, remove that drawing, and now I catch about, I don't know, 10 points of this down move, and this thing went 117 points, but I was all right because it was an account that I couldn't take that much risk in. Then I called out the longs here, took this actually, and managed to ride it out to 50. I didn't catch it all the way up to 78, but I got out at 50-ish, so somewhere right here after they started pivoting, and the market ended up going a little bit more. When this supply line came in again, now notice some things that seem to be confluence here, like supply, stop above, supply, stop in the area, right? Like this is where the market doesn't have to give you like an exact science. So that was kind of like a really good sign to go short. I ended up going long on a pullback thinking we would go ahead and retest that, possibly breaking out because this move from down here was pretty strong, thinking that the market might reclaim this entire move. I was absolutely wrong. It rejected, and once I saw this wick candle, it basically, indicated that we might not do the move that I anticipate. So with that being said, I immediately flipped to short. Now, let's get into the actual strategy. So this box is highlighted in orange, and this is in purple. And when we go into this trade grid here, I want you to see when the market conditions kind of were favorable for both longs and shorts. So this is actually a put that I was tracking to see because they're edges for 0 DTEs. So I pulled up SPX 4745s. I don't even care how out of the money it is. I just want something that's in a price range that I'm willing to lose 100% of it. Because if it doesn't work, I don't want to be like, oh man, or I don't want to get faked out of a move just because the market took 50 cents, 60 cents, and then all of a sudden it goes up 1,000%, right? Like this right here, and you'll see at different times, right? So let's just look at, this is for calls and this would be for shorts, right? The orange. Now the edge is to try to figure out what side of the market is the tick chart predominantly in. And in this case, I would say that we're breaking. So I have a zero line. Above the zero line, there's more bullish sentiment. Below the zero line is more bearish sentiment. And I would say that during this entire region here, it's more chop. We're above it, we're a little bit below it, a little bit above it, below it, little bit above it, below it, and then you start seeing something a little different happening right here. Okay, it's staying above the zero line and kind of playing this green 260 line a little bit better. Let's just call it like as a support or defense. So what essentially what they basically said was that if price is above this zero line, the market is more than likely hitting the ask, which will increase the direction of the market. The market would be in an accelerated phase. So if that's true, then during this purple, we should see the market going up. Based off of me saying that at this point, we start seeing the market kind of playing the upper side of the zero line as opposed to chopping around. Now, during this chop, the market actually dropped. Could be because of this sentiment here. And these were opportunities to continue to bring the market down. But again, I couldn't identify which way the market was going here. However, during this purple grid here or highlighted area, you can clearly see that we were living above the zero line or definitely above this green line. So longs were in play. All right, so now let's go take a look at the chart. At the same time, the add, if you look at the lines, they're all kind of confluent here. At the same time, the add, now we don't really need the put right now, but at the same time, the add was shooting up. So that's, they never said anything about the add using this strategy, but I noticed that I like the add, or this is in this case the ADV-DEC, the NASDAQ Advanced Decline kind of breadth indicator. This is just your $ tick indicator. And over here we have NQ. During that time, NQ pivoted and made a rally to the upside. So here's when the purple started. At some point here, with these two confluences, you can think to yourself, I'm gonna go ahead and take a shot at longs, risking swing lows, and that's what we did. So we ended up catching the bull run to the upside. I probably got in at the break of this. I think my entry was like 17 or something like that. So I got in like right here and managed to take it to 50, which wasn't a bad play. They pivoted at 78 or something like that up here, 786. Now, all of this is still bullish, right? On the chart, you still don't know what's going on, and all of a sudden you get a pushed to the downside. I ended up taking this entry, right, down there, and we did get the move back up, but then they flipped it on us, right? So during that flip, puts are in play. Now, I'm looking at the left bottom screen here to show you when those puts kind of got into play for me. When we broke back below the green line and we made a move and then stopped at the red up here, then now let's see if they live below the zero line more than they live above it. So kind of, you can clearly see it on a 5-minute chart when you kind of take a step back and look at it like that. Now, when the orange starts here, I don't know what the market is doing, but I know that if I'm following this edge, I want to take shorts. If I look up here, the AD is also selling off, or the ADQD is also selling off to the top left. And now if we look at the actual price action during that time, this is kind of what the market is doing. It's just like building to the downside. Okay, now a few things here that I like is that we had a supply line, we had a money zone bounce, a retest fail, break of the 50, I was gunning shorts right after that, which could be the case right here, right? We don't know yet, but it doesn't matter. Like, you're either going to be right or wrong. So I was gunning shorts at the break of that because I already identified that the tick chart could potentially have flipped, and we are going to start living below the zero line here, which is the yellow line on the tick chart. I know that you probably see a lot of things, but we also have the ADQD coming down, and we have price action that's supporting that aggressive selling. Now, they also, so here's the 3 indicators that they basically want you to kind of like pay attention to. The tick chart above or below the zero line, which what is the market kind of doing, right? Is what you can kind of aggregate from that data. Is the market hitting the ask or the bid more? In this case, they're hitting the bid more than the ask, so the market will come down. Okay, they're willing to hit the bid and basically get out of the market at a lower price, just to get out of the market, and that will push price down. That's the only way price moves. If more participants or during this auction are willing to hit the ask, or if more are willing to hit the bid. And then you also have support from the ADQD. They don't care about that. So you use the tick, a trailing stop indicator. So this indicates that I should be looking for shorts since this morning. Even though we had a bull run and we made money in that bull run, this supply came in and you would have made more money to the downside. Probably would have been the safer bet, but here's where it gets crazy. They also use a squeeze, whether it's a TTM squeeze. I have a Bollinger Band squeeze that happened right here. So when the Bollinger Band in the Keltner channel contracts or they flip, you'll see a green kind of cloud where this ghost cloud is at. Once that happens, the fire can, like, when it squeezes, or when the squeeze fires, it can go like berserk. This is a good example of when the Bollinger Band is squeezing right here. I don't know what the tick was doing during this time, but I'm starting to pay attention to that a little bit more. So here's a squeeze happening here. I'm pretty sure this was kind of a Wild West kind of condition here, but we were below it, then we got above it, then that failed. But this is overnight, so you kind of want liquidity to be in the market before you do that. But above or below that's a super trend line, which my numbers are different than theirs, so you got to take that into account. This thing was telling you to be short since back here, and boy did it pay out, right? Anywho, so a trailing stop line, a tick chart, okay, and a squeeze. If a squeeze fires, we can see that during this entire orange box down here at the bottom right, this is the actual put contract. So let's see how the puts behave during this time. So we knew that we wanted to go into puts. We probably missed this entire run up. So you had a $2.50 entry down here at the lowest, maybe $3.91 here, shoots up to $6.48, pulls back during this pullback right here, right? And this is when the market kept rejecting the high part of the tick chart. So that pullback could be an indication to get in at maybe, at the best, 370 on this contract. The very next swing to the downside, and this is where you need a trend to make money on options. The very next swing shoots all the way up from 350, 375 all the way up to 1189. pulls back and hovers around 820, shoots up to 11, comes back down to 850-ish, and then we make a run to 22 during this move right here. This is the initial drop right here, right? Market, the puts go up, market pulls back, puts go down, made a higher low on the put contract. This condition on the tick chart is still true. You should be looking for shorts because the super trend or the trailing stop is telling you look for shorts, or that's still in play. Over here we have the ADQD continuously falling down, probably just going to the side right here. And when you start seeing it going, you can probably get a decent fill of I don't know, maybe even $6 on this contract, $5.38 on this contract. Me, I like to take the market as it's stalling up here, or rather, let's do this. Every one of these entries up here is what we should be looking for, right? So the first one is down here. Right, between that one and that one, this is where the price is living. Then this one here is somewhere down here. So you really can capture the market at a dip and just be willing to stop out if they violate some condition. In this case, if they would have violated this all the way up here, this contract would have went in the toilet. So I don't want to risk anything where I'm going to have to get shaken out because I just lost 50% of the contract. I'm going to go and we can find a cheaper contract. Let's find something. Let's just say what's a fair thing that we're willing to lose, $100 on a day. Let's go look at these, right? Like these were not in the money at the time. These were probably 4 tiers away from the money, being in the money. But at that time, something different happens to contract. And I used to see this when I was playing options, but I never, and I felt it, but it was always too late. This kind of gives you a heads up before it gets going. So we're gonna copy this, right? Copy. And we're gonna go back over here. And futures, look, they just jump right back up. Any move back down, these things are just like in crackhead mode. But that's just my opinion. That's not financial advice. All right, let's see what these contracts are doing. And look, the ad kind of had a nice little pause, but now it's coming back down. So right at the money zone too. You tend to see these wicks there, jump in. Or at least try. Maybe, maybe not. But this entire orange grid, I would say price is, yeah, still living below the green and below the red. Yeah, more or less to the downside than the upside. So I would still do it. These here, you could have risked 95 cents, $1.30, and you would have been up $1,000, 1,200 right there at the highest. Before it left the station, you know, like we can continue to go and look at contracts that are out of the money. The crazy thing about this edge is that it's so defined, and I think within the last 3 days, I've seen some tremendous results. Even when you have this reading on the tick chart wrong, I think the best option kind of strategy that I find, or the best type of investment kind of edge that I found is you almost have to not care about the results. So if you're attached to the trade financially, you're going to get shaken out. Your risk management should shake you out. You should say to yourself, oh my God, I'm losing 50% of something, but maybe you shouldn't have risked that much anyways, right? But if you can find an edge where you can say, I'm willing to lose 100% of this position and I can go in very cheaply, that is gold in this market because we never know what's going to happen. So if you put up DraftKings or some of these sports bets, to put a bet, it's like $5, you know? I don't care if I lose $5 if I'm going to make 500. That's just become a entire different personalized thing. But for me, watching this was kind of like, or learning about this from those guys at SMB Capital. Shout out to those to the gentlemen over there. Understanding that the market is hovering or living 80% of the time below the zero line. I'm going for puts within this entire grid. I'm actually using the ad to confirm that, and I'm using the super trend line to confirm that. Puts went bananas to the downside, and if you have a 0 DTE, it was even better. Now the crazy thing is, you didn't really need a squeeze. We got a little baby squeeze, but the thing fired like crazy. But back here, we didn't have I don't think we had a squeeze for the major down move that happened this morning. So that's a third component that they recommend. You want to see a squeeze happen in the market, and when you see that, then you kind of tend to have a pretty good slingshot of a move. Now, all of this came without the squeeze to me, right? Like for me, I don't see a squeeze at all. And we just kind of followed the trend to the downside as the market continued. So, to wrap up, a tick chart, you want to analyze whether the market is living above or below the zero line. I added the ADQD since I'm playing with the NASDAQ and I'm not doing options. And I have a system where if a supply line comes in and these two conditions are good, I'm confident in that short. And vice versa, if a demand line comes in, I'm confident in the longs. Now, you might think that the longs at this circle here, because we have circles letting where we kind of have like interest, made like there was no demand line here. Well, we crossed the 50. That's one condition that I like. This entire condition is purple, so that means that we're living above the zero line and the ad is going up. So like I'm gonna get rid of all this right here because I really don't do options anymore. So we'll get back to an NQ chart, and I don't really trade the 3 minute. I trade the 5 minute, which is above up here. But I want to show you that there is or was a demand line that we could have played from down there. In addition, purple candles for me tells me that the bears are weak and we might have a good push to the upside. So I have a number of different things that I use to kind of extract or define market conditions to extract money out of it. So where that circle is, we have a 1 hour demand line. We have a 30-minute demand line. We don't have a 15 and we don't have a 5, right? I will take a 1 hour demand line with no problem. And we had a pretty significant move to the upside before they started dropping again and breaking lows. So that's the simplicity of how I trade as far as, oh shoot, there looks like there's enough orders down here to cause a divergence and volume to cause a wick. I'll take this, swing lows my stop, and then it's just, good luck with that trade. It has a 70 to 80% win rate, so I'll take that over anything else in the market. Like, a lot of people do breakouts, breakdowns, and stuff like that. I don't really do those. I'll take these pivots, and then I'll take a trend trade. But the trend trade seems to significantly work when the market is trending, and you have that tick chart condition along with the ADQD condition. Now, of course, anything will go against you, but my stop, I'm working on creating a better stop system when I take a trend trade back down. I think risking this swing high or pivot after I getting at the break of that might not be a bad idea, or kind of waiting for this consolidation, because like this could consolidate forever. But you want to get a good fill, probably a little bit below the money zone, and then stop out at that pivot because it showed that that's where the break might go. So that's not really a breakout trade since we have a pullback, but it's a breakdown of that pullback in this trending bearish market. So yeah, I like that idea. I'll play around with the stop if I do take this, but I wanted to share how lucrative that strategy could be and actually show it in real time based on some of the stuff that I learned watching the SMB Capital video. Now, this could be a stop hunt move right here, just like we saw in the 5 minute this morning. Risking swing lows, not a bad idea. However, you wouldn't be really using the tick chart to determine that, or maybe you do. Maybe you say, oh, we have a high here, a high here. Maybe you don't want to see them go below this anymore, right? And you just take your shot to the upside. But right now, I would say that this entire grid is just like living. There goes a nice little pop, living below the zero line. So it's a really good way to kind of extract shorts out of the market, or the down move out of the market, or some sort of confirmation, right? Because this is what we I don't need confirmation. I'm gonna just take the edge. But yeah, man, for those who find anything like useful out of this edge or strategy, once again, shout out to the guys at SMB Capital for, really showing me how to use that tick chart. Cause I used to see it, but I didn't know that you wanted to kind of focus on what side of the aisle is the tick chart living at. Now you can absolutely make money on taking the pivots down here when the market showed that it was extended beyond this 750 area. Now I didn't make these levels up. I think these levels are, kind of what I've seen the market do. So you can see like the top side is at 840 while the bottom is at like 756, and like 1,000 versus 983, and then it's like 260, right? Like that's on par. That's not too bad because I want to see which side is it living on. But when it touches the extreme, you can make money as the market comes back and kind of rechecks itself. This is like a referee blows a whistle, market goes up, right? It's playing fair, blows a whistle again, market goes up. Blows a whistle again, right? Like we're just blowing whistles, and sometimes it continues to go down, right? Like right here, we didn't quite make it above that, got another blow the whistle, and then we start seeing a real pivot. So maybe there's edge in seeing them tap here a few times and kind of exhausting sellers. And if you see like a higher low, maybe that would give you like more of a confirmation or more of a confidence to jump in. Like right now, I jump into the longs because the tick chart is below the 0 line, and I just want to see this thing go right back up. Because if we're gonna live above the 0 line, then the up move is going to be stronger than the down move because they're hitting the ask, and it's an assumption. Is it true or not? Who knows? No one will know. No one will know. But I'm gonna put up enough risk that I don't care if they go down here and call it a day, because this is a lagging indicator. I don't know what's gonna happen during this time that I take this risk. But once again, this is Spark from Spark and Trade, and I thought it was a really, really great video to watch. We have the purple candle conditions going into green, so that would have been a good trade or a pullback entry. And your target on this thing, or your enemy, is every single, moving average that every retail is watching. So you might get, we just cleared the 5, so that's a good thing. You might get smoke as soon as you hit like 660s up into the 70s area. Then over here on a 30-minute, you might get more smoke, meaning you might get a rejection. And if you hit the 1 hour, you might get even stronger rejection. But if you touch 714, 712, this trail stop, it's either going to squeeze out shorts or it's going to trigger more shorts to get in, because that's a very significant pullback to get in on a trend. So an example of that is it's like right here. Anything close to this supply stop is just like, my stop is right there. I'll take that trade. Right here, this morning, I got out of shorts because it's either going to squeeze shorts out, or they're going to reject it because there's more orders that are willing to hit the bid at this level. And that's what happened this morning. It was kind of tricky, but that's what happened this morning. So the longs here was pretty much not a bad call given the purple candle condition and what we saw over here. Got a little bit of buying coming in on the ad. Are we living above or below it? That's still up for grabs, but it's definitely a decent kind of snipe if you can grab the lows and take a move back to the upside. So you would have been in somewhere around here, I believe, and made about 20 points. Jesus Christ. So yeah, guys, that's just one of the dopest things I've seen come out of like trying to find an edge in this market. And if you can just add that to something that you have, a system that you have that works, don't overcomplicate it. Don't think that it's, a holy grail. Just know that, hey, this looks like it could work for me. And if it doesn't, don't use it. I think it's a lot to kind of look at all these different things, moving parts, and then try to determine a trade. I don't like complex trading systems. I really don't. Like, if you ask anyone that if you join the Discord group or anyone that I trade with, I literally tell them demand is down here, buy. I'm like, but it's falling below it. Okay, watch 3 hours later, this thing will be up here. And you're like, damn, that was a good buy. Now, how do I know that? I don't know anything. All I know is historically, the data shows that they ping pong from a demand line, and you see a move that's just like out of this world. They reject this, breakout, rejected it, breakout. I don't know which one is gonna happen, but I'm taking shorts up here. I'm gonna hopefully extract this entire move. I'm taking longs down here, hopefully extract this entire move. We'll probably even get out because there's an enemy waiting for me right here, and then I'll miss this, but so what? I consistently can do this, and that's as simple as my edge goes. Higher time frames, I take those with more confidence, and the lower ones, it is what it is. But thank you for tuning in. I definitely wanted to share, a video about strategies that I believe can be beneficial or work for us in this market. And, you guys have been following for quite a long time. I'm just using supply and demand that comes up based off of divergences in volume. And it has, look, boom. Right? Like, we're back at this. This is a stop hunt. It could be a play to go long. We have purple candle conditions on this side. Let's see what if we have a smaller time frame with something. So this is a 3-minute chart. Supply is coming in right there. We really have nothing other than the tick chart saying that it's making higher lows here. That could be an indication that someone is buying this dip. Right? Doesn't have to be true, but someone is buying the dip. Now to get this pop, no one knew that would come, but we basically, I kept saying buy the dope when it was lower than the zero line. It would be a good buy, and kaboom, this thing went nuts. So I would say that we probably have a different condition somewhere around here, where the market has chosen a different kind of like pivot, right? Like we didn't know that really until. We didn't really know that until like right here, right? And this is still sketchy. You don't really know, but it wasn't a bad kind of call based off of other indications, like the ad being green. So, someone's buying down here, right? Like, and this was way back here. Now, if you had stopped out because you didn't want to be wrong, it made no sense. The previous swing low is what they usually defend, so you gotta risk accordingly, and you can snipe an entry using the 3-minute a little bit better. So that's what smaller time frames are for. And kaboom, we made a move all the way up to 847. We haven't done that since 12:14 today. So yeah, I hope that was helpful. I hope you guys can extract money out of the market. Safe trading, guys. Peace. Have a good day.